Welcome everyone to today's edition of Frontier Opening Bell. I am Bosin Omofaye, and we are glad to have our panelists with us here this Thursday, the 9th of July, to drill through some of the big stories across economies and markets on the African continent. Welcome Ali Kensaju, who is a CEO and founder of Reach Frontiers. We got on the frontiers together. He's the one looking at the frontier Africa for us on the East Coast. Good morning, Ali.
Morning, Basan. Good to see you as always.
Thank you so much. It's good to have you bright and early, looking great. And of course, also ready to take a bit of Nigeria's market for us, Joshua Odebisi, who is the banking analyst at Vetiva Capital Management. Good morning, Josh. It's good to have you.
Good morning, Bosin. Thanks for having me.
Great. It's good to have you as well. So let's just go a bit into the market, run through this for everyone for about a minute, where the market finished off on Wednesday, midweek session. Nigerian market up about 3.75%. The Egyptian market was up by almost the same margin. South Africa GSE give a bigger picture, 1.13%. On the downside, for some of the five markets we cover on a daily basis, the BRVM was down 0.83% in the West Africa space. Ghana was flat. Kenya, the Nairobi Securities Exchange, still looking on how to get this 140 reading back on the All-Share Index, down about 0.5%. Take a deep into East African markets. Some of the big stories: US and Kenya yesterday started a formal bilateral trade talks in Washington. Meantime, on the same day, the EFDB released East Africa's Communities Regional Economic Outlook Report. That's a big story. And the central bank is set to raise 60 billion shillings in treasury bonds via auctions. In Mauritius, the Monetary Policy Committee decided to keep its repo rate at 1.85%, while Tanzania's June inflation stands at 2.9%. Ali, let's start with this Washington story.
So, Basan, this has been on the radar for a little while. We've known from last year that Kenya was looking to negotiate a bilateral trade agreement with Donald Trump and the United States. There was plenty of unhappiness about this fact. People felt that Kenya was getting ahead of the African Free Trade Agreement, and if any agreement should be signed with the US, it should be done en masse, continent-wide. There was plenty of criticism. And Kenya's thinking was that essentially AGOA was now time-bound at 2025, and therefore, given the amount of trade, about $1.1 billion or thereabouts, and a lot of textile AGOA-based exports into the United States, that Kenya couldn't afford to miss this opportunity. I think from the side of Trump, the Trump administration, we know Trump loves bilateral. He hates multilateral. You can see that, whether it's the WTO, whoever you care to mention, anything multilateral, it's a red flag for the Donald. So Kenya taking that opportunity, there's good chemistry between President Kenyatta and President Trump. Interestingly, it's an Italian interlocutor, a very famous fellow who hangs out in Malindi, who brought them together. But the point being that Kenya is seeking to put together this bilateral agreement. Betty Minor leading it from the air. Robert Lighthizer, who's the main man on the China brief for Trump, leading it from the United States. So I think net, it's a positive for Kenya, but you've got this geopolitical, geoeconomic issue with other African countries who are quite unhappy with Kenya sort of getting ahead of the curve. So that's what that is all about. AFDB put out the East African component of their supplemental update to the African Economic Outlook. East Africa, in the context of a very COVID-related sub-Saharan African economy, is a bright spot We are not entirely dependent on commodities. We're a commodity taker rather than a seller. That has played some, has been helpful. AFDB talking about that. So a little bit more optimism around East Africa when you compare it with other parts of the continent. But I, for one, still think that the AFDB is a little bit too optimistic in their outlook about East Africa, a bit too bright-eyed and bushy-tailed in terms of what they're predicting. And I would be about, I don't see any growth out of Ethiopia this year, for example. I think Kenya will be negative as well. And I think that's the way it's looking, particularly because of COVID being an exogenous uncertainty that has not been resolved yet. And we're opening up our economies just when our numbers are beginning to lift off. And therefore, I think it's going to be a very big struggle to successfully open our economies. CBK to raise 60 billion in T-bonds, that's $600 million. Same story as in Nigeria. They've manufactured a ton of liquidity in the local market. That liquidity is being accentuated because there's a complete lack of private sector credit growth. So you've just got banks loaded with cash, taking refuge in the government bond market. It makes sense for the CBK to sell more bonds into that liquidity wave. Mauritius MPC, repo rate at 1.85%. I'm sure all of us in Africa would like repo rates like that. GDP to shrink 12.5%. That's all about tourism. Tourism is dead in the water this year and probably dead in the water for half of next year. So, but however, they are still a very big conduit into sub-Saharan Africa, though they've had some challenges with the European regulators and others about the role that they've been playing in that capacity. Tanzania inflation very soft, 2.9%. Tanzania, big agri economy. Food prices have been capped. They produce a lot of food. So that's a bit of a sweet spot for them. But of course, they have been doing a Bolsonaro when it comes to COVID-19. We've had no statistics out of them since May. The president said that God had told him that there was no COVID in Tanzania, but we keep finding COVID amongst their truck drivers at the border. So, take it whichever way you want. But ultimately, they've tried to open up. They've pronounced the world we're open. But, no one is going to go to that situation, least of all tourists. They've lost about 1 million jobs on the tourism side at the moment.
Interesting situation there across the East African region and adding Mauritius into it. Of course, part of the report from the EFDB was that economies dependent on tourism will take a bit of a beating in the current year because everyone's trying to stay at home right now. So tourism is still a no-no, and I'm sure for Kenya with your tourism industry also part of a major economic contributor. I'm sure that will be in Mombasa and elsewhere. That's also the similar story. Stand by for our Southern African story, Ali, in just about a minute. Let's touch with Nigeria and West Africa, where the banks continue to make the headlines because of the outlook on the second quarter and the first half 2020 earnings. Some folks are looking at some interim dividend. I would love to see that come through. We can use every money naira on the table right now. Meantime, one of Nigeria's tier one listed banker, Access Bank, says his Zambian for Kavmont Holdings in Kavmont Bank. That is a story that is still being discussed. Meantime, 13 Nigerian companies face suspension in September. They regulate the stock market. The stock exchange authorities says they've failed to meet the end of June deadline to report on their earnings. And then Nigeria's central bank resumed official FX trading of $100,000, very small patch on Wednesday after the rate unification, which was done last Friday and early this week. In Senegal, the Bank of Habitat is paying 6.25% half-year interest on its diaspora bonds. So, Joshua, let's talk a little bit. Let's chat a bit to Nigerian banking industry here. You're a banking analyst at Vetiver Capital. What's driving these sentiments? Is it the earnings expectations? Is it the loans? Is it what is it actually? Joshua?
Okay, so there are a couple of things that are driving, the sentiment. First of all, we have to remember that I think it was part of our outlook and at Receiver Capital that, the banks were going to gain from any kind of naira dollar revaluation. And since that realized, you can expect that the banks are going to, especially, the larger banks, your Access, your Guarantee, and your Zenith, the banks that are more likely to even give interim dividends are the most likely to see the largest gains from the FX revaluation. So that's a pretty positive aspect that's going to, prop up their non-interest income. The interest income lines are still a little bit bleak because Q2 is where the most of the impact is going to be felt from the COVID slowdown in economic activities. So the most important thing is that we remember that while that is moderating, while interest income is going to be moderating in the near term for the next 2 quarters, then we would still see some FX revaluation gains and other non-interest income items to prop up earnings. And so, yes, we're still expecting interim dividends at least on par with what we saw in the previous year, because the banks are going to want to, give investors, both local and foreign, some sort of encouragement or some sort of, positive story to galvanize their prices and to make sure that, they don't fall even further. And I think that it's sort of, translating into the kind of sentiment we've seen in the market in recent.
Are you bullish as well, Joshua? Are you bullish as well on the earnings expectations from the banks? If they're talking about interim dividend, where do you think the money is coming from?
Well, okay, so bullish is the wrong term to use in this situation. Hopeful, more like hopeful, because I think there's cause for optimism. Business activity is slowly coming back. It started coming back sort of late in Q2, so that might translate, depending on where the bank's cutoffs are, it might translate into some increased earnings. Now, costs, I think we will see some moderations in costs, or cost saving, mechanisms brought in by the banks that might help to also improve, bottom line. So all these things could, factor together to give us some decent earnings, some decent bottom lines. And so hopefully what the banks would then do is give, like I said, on par interim dividends with the previous years. If not, there will definitely not be an improvement, but at least on par with previous years, just to encourage investors to stay in the market.
Also, let me just ask and say good morning to Ayode Jebo, who is the CEO at Afrinvest Securities. Ayode, I'm sure you're listening to Joshua about the banking sector and what he thinks will be. So if these banks, at least the tier one, or the 5 or so, the big boys in the market, decide to pay interim dividend, do you think the market will reward them with a measure of share price appreciation in terms of their for moving forward in Q3?
Yes, very interesting and well said by Joshua. You can rest assured the way Nigerian investors are wired are more dividend inclined. So for most of the investors are not even bothered about the yield. So we expect that if they're able to sustain, even if it is a little reduction to prior interim dividend, would see that major rally in the market. Now that we have a lot of domestic investors positioning, we should be able to see that more interest from them, and we may even see more interest from the PFAs, who still are not very keen about the equities market. Looking at their when you check their total investment in the equities, it's still less than 5% of their total portfolio. We feel that for them, coming in would also be another major push for our market, given that we expect that interest rate environment will remain low in the near term, especially for shorter term instruments. So it's really going to be a positive one. Everyone is on the lookout to see the Q2 earnings, which would capture the impact of COVID-19. And for us, it looks like a worst case scenario. So we feel that that's like the bottom. Once you are able to establish that this is their worst for any of the quoted companies in Q2, then you can be able to know what to look forward to in subsequent quarters.
Okay, so I want you, Ayo, and Joshua to be on standby. Access Bank in Zambia says he's looking to buy 100% of one of his rivals in that country. Just a few days after UBA announced that his appointment of 2 new deputy directors, one for Nigeria and another one for Africa. What's this race, an African race, all about for Nigerian banks? In just a few seconds, let's touch on Southern Africa markets very quickly. A very big jump for the all-share index in Joburg yesterday, 1.13%, because gold prices went up. The miners' shares rose very strongly. Gold, the rich man's wealth or safe haven, is now above $1,800. Even silver, the poor man's gold, took a very strong drive up north yesterday. Meantime, yesterday night, the authorities in Namibia shot the country's national airline. The company is owing so much money and job losses on the counter. Meantime, in South Africa, the airways, the authorities, the unions agrees with the authorities' severance package. About 1,000 jobs could be saved. And yesterday evening, the African Union and the World Food Program says they're putting $1.75 million in the pockets of Zimbabwe for the country to go through this farming season and prevent the problems associated with drought. That came from the Africa Risk Capacity Insurance Limited. Ali, where are you biting the first, the Airways or Zimbabwe safety net?
Okay, so let me start with Zimbabwe. The stock exchange is still closed. Basically, you know, there is a real issue around the value of money. We've got a black market rate which is just skyrocketed, a lot like it does in Caracas. And unfortunately, I've got to be frank and say that I just don't see, I think we're at a tipping point moment in Zimbabwe. And at the moment, I don't feel that the political class have a handle on the situation or have a plan as to how to change this. So I'm very concerned, but I just don't see how they're going to get through this. And I don't feel that ZANU-PF have a plan. So, you know, $1.7 million is a drop in the ocean. So, sorry?
But that $1.75 million, well, Harare can use that somehow.
They can use that. I hope they use that correctly. You know, they had a thriving agricultural sector. This is a very rich country, but it has been mismanaged. And, you know, at the end of the day, you've got to come up with a plan which is credible, which international multilaterals can get behind and get back on track. And we've seen it slide away now for a number of years. And I think the shuttering of the stock exchange is a very important signal in the noise. You don't shut your stock market unless all other options are no longer available. Johannesburg Stock Exchange you were talking about up again. This is all to do, as you said, with the gold price. We're last trading at 1,815. So 1,815. Record high was around 1,920. We're going to blow through that in the next, it may be as short as 8 weeks in my view, and we're going to go considerably higher. The situation, it's a perfect storm for gold and precious metals. We've seen a huge debasement of fiat currency. We got a money printer on overdrive in the United States. We got a money printer on overdrive practically everywhere in the world, except of course Africa, where we don't have that option. And really, I cannot think of a more conducive environment for gold. So I think we're going to see a further rally, which will be supportive for the Johannesburg Stock Exchange going forward. And Namibia grounded. This is the problem with many of our airlines. It became like a vanity project for most countries. Some were serious, like Ethiopian. They made a good effort. Others, the president decided overnight, I need my own airline. They mismanaged it. The problem is, this is now a circuit breaker for airlines because of the tourism story that we've already spoken about. There's no demand here, and the question is, how long can they survive for? And Namibia has to be praised for making the decision to stop loss the airline when they did. Others are still hanging on, throwing Hail Mary passes and hoping that somehow the world is going to open up tomorrow, which it won't. And finally, South African Airways, another airline which has just hemorrhaged money for so long. Tito has been the most aggressive about trying to deal with the situation. They've got to deal with it. I think the idea was really to fold up South African Airlines and reboot and restart with a clean balance sheet. I think that's where they'll go eventually. But the lesson here is airlines are a tough business, and in 2020 they are a business that only knows how to lose money.
Interesting. Thank you, Ali. A bit of a nice overview there about the Pan-African commercial airline business. Let's get back to banking industry. The Access Bank in Nigeria, which is the parent company for some of the subsidiaries across Africa, announced plans to have 100% buyout of Cape Mount Holdings in Cape Mount Bank in Zambia. Joshua, what's your take on this story?
Okay, so it's a very interesting one. It's part of Access Bank's aggressive expansion strategy across Africa. I think, they've said it countless times now at their, investor presentations that their ambition is bigger than just the Nigerian market. They want to be, Africa's most important or largest bank. So this is, I guess, a strategic move to increase their asset base in Zambia. Now, the interesting thing about it is that currently Access Bank Zambia is worth about 1.5 billion Zambian kwachas. And I think the bank that they're attempting to buy is about the same. So this would effectively double their asset base in Zambia and, move them up the ladder a little bit in terms of size and scale. But in terms of earnings, what it would translate to in the near term, at least, is pretty negligible. I think the current Cape Mount Holdings total revenue or gross earnings for the last reporting period amounts to about 0.4% of the gross earnings of Access Bank as a whole. So I don't think that it would add much to their top line, at least not in the near term, but it's still part of their overarching strategy. And you also mentioned that, UBA have, also done some aggressive moves to expand their Africa, business as well. In the case of UBA, about 40% or more of their entire revenue comes from, the Pan-African side. So for them, it's a bit more of an important or a larger chunk of their gross earnings than it is for Access Bank at this time. But it's still, part of Access Bank's strategy. And I think that in the next few years, if they continue with this aggressive, acquisition strategy, they might just keep on moving up the ladder.
Interesting. Joshua, Adedeji, is this who's chasing who here? Is Access Bank? We saw the big Diamond Bank purchase just about a year ago. And then here they're going in Zambia again. Meantime, UBA is not stopping for the catch-up. So is this a new wave of thinking of Nigerian banks that, look, don't just play this at home, you need to go out there? What's the focus? What's the thinking for you?
Yes, I think it's an interesting wave. And if you also look at financial inclusion rates in Africa, is still less than 50%, which shows the potential that if going into some of these African, especially the SSA area region, you as you progress, you also be able to take over that market. Let's also not forget that technology is also assisting in the expansion. So as most of the telcos too are also trying to expand, and you have more people connecting you via phone, they would also be able to deploy those their their platforms via those devices. So we feel that it's a positive one, but we know when you check relative to what their contribution to revenue will be, it will still have a long way to go. But it's also good to it's also help them to diversify as we progress. So if the Nigerian economy is being challenged, then they will also have other countries that may be a bit stable and would be able to absorb that shock that because Nigeria continues to account for a major part of their revenue.
Interesting. Ayodeji, let's add in a bit of a Northern African story sticking around the banking industry. This is the story. The Egyptian stock market gained 0.7% yesterday, of course, driven by about 1% increase in one of the commercial bank. Meantime, Islamic Development Bank Group is raising $2.3 billion to commitment to COVID-19 and tracking Egyptian market or focusing on that. Italian fund manager Azimut Holdings is floating an equity fund for that market. Azimut Holdings has about 61 billion, that's $1 billion in assets under management. So, Ali, how do you go in here? The Egyptian market, what's the attraction in here for this Italian fund, about 61 billion US dollars coming into the Egyptian stock market?
So, you know, Egypt, if you looked at that African Development Bank report, actually was praised to the highest, talking about 2% positive GDP growth, talking about strong macroeconomic fundamentals, strong support from the IMF. On top of that, you've got a big divestment program that's being proposed by the Egyptian government. So I think when you take all of that in the mix, that's what's attracted something like Azimut Holdings into that market. I'm bullish about Egypt. I understand the political stress and tension that is there under Al-Sisi, but economically speaking, it's the most coherent economy for any external investor on the continent. It's probably second or even first when you compare it to South Africa. And therefore, I think it's very attractive. You're seeing the currency now starting to strengthen again, getting close to 16. They know how to attract money in when it's needed. And so therefore, I think that's the decision driving that. Two other points, the stock market's beginning to firm up. We've had a good run this week. And then the Islamic Development Bank story, you had $2.3 billion. It's a very strong bank. I think it's a AA or AAA rated bank. So that's relatively easy for them to raise the capital.
Yes. Yes, and of course, Nigeria's got some relationship with Islamic Development Bank when it comes to funding. It's been variously mentioned in Nigeria's 2020 budget and the country's drive to secure international development finance for some of the projects, in particular in infrastructure, road, rail, and other things. So I'm sure part of this money likely end up in Nigeria as well. Of course, the country's done so well with the Sukuk infrastructure-backed projects that we've seen so far. So thank you, gentlemen, for giving us today's show, Frontier Opening Bell. Ayodeji Ebo, thank you very much from Afrinvest Securities. Do have a great day. Joshua Debisi, banking analyst at Vertiva Capital Management. Of course, Ali Kansachu in Nairobi, the CEO and founder at Rich Frontiers Management. Do have a great day, everyone. Thank you so much. See you tomorrow. Let's have a TGIF here on the program bright and early.